Hey traders, this is Blake Morrow, and with me today I have Oliver Sloup, who is the Vice President of Blue Line Futures, but also the co-founder of Blue Line Futures. Good to see you, Oliver.
Good to see you as well. Thanks for having me back.
You know, it's great to actually have you back. I know we're kind of laughing about this because the first time we met and the last time we met, which happened to be the same, we talked about wheat, and you said, Now, this is before everything had happened. The world kind of changed a little bit. You said, man, I was looking for a spike for wheat this year so I can sell into it. Well, we did get a bit of a spike following the Russian invasion of Ukraine. I don't want to make light of that situation. However, we did get a really big spike in wheat. So how did you manage that?
Yeah, we got a big rally and then some across the board. Corn, soybeans, wheat, as a lot of fear premium got pumped into the market. Russia and Ukraine together account for about 20% of corn exports and 30% of wheat exports. So we saw those markets really take off, and that wasn't the catalyst that we were looking for when we were talking about looking for a rally to sell. We were looking for a springtime seasonal rally to look on the short side, but that escalation between Russia and Ukraine really accelerated the price action to the upside, and I think got very overextended to the upside. Looking at a couple different indicators like the wheat ETF, you see that market just sucked in a lot of retail investors. And when you get that much retail participation, it's usually a bit of a caution flag for the professional traders. And I see that you just pulled the chart up there, and what I want you to take a look at is that volume down there. You can see that wheat ETF typically traded 200 to 300,000 contracts or shares rather per day. But then when wheat started rallying, you saw as much as 27 million shares per day. So when you see that panic reach the retail level to that extent, it's usually the sign that this market has gotten a little bit overextended to the upside.
You know, one of the things I love about trading doing these interviews with you and your partner, Bill Baruch, is that you guys do trade. You're not just like, hey, we're behind the scenes and we're managing Blue Line Futures. You guys are actually trading. You're in with your clients. You're talking to your clients all the time. One of the things I really admire about what you guys do over there at Blue Line. So from a trader's perspective, how did you deal with that big rally? I mean, I know the volumes were increasing. Did you stand in the way? Did you wait for the volume to shift? Did you wait for some candle reversals? Did you wait for a full daily reversal move? What did you look for the trend to shift from bullish to bearish?
Right. Well, in a market like that, it's easy to get the sense of FOMO, or the fear of missing out. And it sucks people in thinking that we're just going to continue to rip to the upside. But being in the markets long enough and know that, being in cash is a pretty good position to be in when you see the volatility expand like it did. So we're mostly sitting on the sidelines until we saw some sort of a confirmation of a top, which we eventually got. And then I think part of the reason why we saw wheat move so much as well is because I think there was a big fund caught on the short side. Looking at the Commitment of Traders report on a weekly basis, we saw that funds had a very extensive long position in corn futures, a very large position in soybean futures. The only grain that they were net short was wheat. So I think that added to it. So we wanted to see that market kind of come back to some sort of normalcy. We had the ATR, the average true range, upwards towards 70 cents. And again, that's kind of the environment that you want to kind of sit on your hands and wait for the volatility to subside in for an opportunity to look at the short side, which you have done here recently.
Okay, well, I was going to say, so now that the world's kind of changed, I have to use that because obviously what's happening in Ukraine is impacting your markets dramatically at this moment. So are you still looking to be on the short side? Do you think that the situation is going to improve? How are you navigating that right at this moment with wheat?
Yeah, I still think that there's downside potential in the wheat market, especially if we get consecutive closes below that psychologically significant $10 handle for the May contract. If we break and close below there, I think you start to see the selling snowball a little bit, and we could break another dollar and a half and get back in the neighborhood of $8.50 to $9. And I think the opportunity is more so in corn at this point. As I had mentioned from the get-go, this is just as much of a corn story as it was a wheat story, but wheat got all the sexy headlines because there was a short trapped in the market. But I think corn is where the good opportunity is. You've got the May contract pulled up here, which hasn't really done much here over the last couple of weeks. But if you look at that new crop December contract, I think that's where the opportunity is. We had a USDA report out here recently, which showed a big acre shift from corn to soybeans. And so you're seeing the market try to what we call buy acres. And so you're seeing the December corn contract catch a bid while the November beans kind of collapse here. So it's going to be really interesting to see. There's still a lot of uncertainty out there as far as input costs and weather here in the United States for the growing season. So again, I think the opportunity in the grain market to the upside is in that new crop December corn contract.
Yeah, and you can see it highlighted in teal on the chart that you're looking here. That's interesting that dynamic that you're looking between the two different contracts. And I think that's a great nugget, valuable information for traders that are at home. Now, you know, one of the other markets, Oliver, that's been really impacted has been crude. So how do you feel about crude right now? I mean, crude has, you know, made this massive rally following, you know, the situation in Russia, Ukraine. How do you feel about it at this moment?
We're still bullish longer term. We've been bullish for really going back to last fall. I'm sure you and Bill, my partner, had talked about it several times. But
he's been talking about 100 for like a million years, it seems like, and right? we got it, and we got some. Maybe not the reason why we wanted it, but he got it. So yeah,
and for a lot more reasons than escalate global geopolitical tensions escalating. But again, as mentioned with the grain market, we got the rally, and so there's opportunity to act on that. Obviously, we get to a certain level where the value to the upside becomes very much diminished in a move like that. So you've got to wait and let the dust settle a little bit. But now we're coming back in for some trend line support, 97 area on the continuous chart, and we like that to hold. It's not going to be an easy trade to the upside. There's going to be a lot of day-to-day gyrations, as I mean, you can see over the last month and a half now, but we continue to like the upside of crude oil and think there's some pretty good opportunity there as well.
So if we do get a dip in crude, what would be your ideal price to be a buyer? I mean, if, you know, obviously you live, eat, breathe all of these charts. So, you know, looking at it right now, let's just say it broke 97 and you get some stops getting triggered. Where are you going to be on the other side trying to take in, you know, those sales?
Right. So a break and close below that trend line support near 97, I think, opens up the door for a potential retest of those recent lows, which come in a little bit closer towards 93. And at that point, I think that you could try getting a little bit more aggressive down there with a pretty tight leash. But again, you know, these are trading levels to trade off of, not get married to. If you buy the trend line support, you know where you're wrong. You're wrong is on a break and close below that trend line support. You rip the Band-Aid off, take your medicine, and wait for another opportunity. And that next opportunity would be down near that $93 level. And going back to kind of what I had mentioned with the wheat market, the retail traders get involved in the crude oil market taking off. I got an email that night, I think, when we ran up to $130, just a random email from somebody that has seen our content asking how to hedge fuel costs for a summer vacation. And again, it's when that peak panic trickles down to that retail level in such a big way that it is a big caution flag here in the near term. So I'm glad that we've settled back down here. We're finding support. Hopefully it can hold, and onward and upward.
You know, if I have a V8, I'm going to say I hope it doesn't hold. How about that? Well, you know, Oliver, you know, you sound like a trader, and when you say, look, this is where we're wrong and this is where we get out, Those are the types of things that we here at Traders Summit, we love to hear. Look, as traders, the only thing we can really control is our risk, right?
That's absolutely right. And I always tell people, it's okay to be wrong. The only thing we know is that we don't know. There's a lot of variables in these markets, especially with the flow of information that we've seen develop over the last several years. So if you can, be comfortable with taking small losses and chipping away at it, I think you put yourself in a better opportunity to have some long-term success.
It's okay to be wrong. It's not okay to stay wrong.
Bingo.
Right, Oliver?
That's exactly right.
All right. Well, hey, I love what you guys do. I love what Bill, Baruch, and you yourself do at Blue Line Futures. Tell us a little bit about what you guys do at Blue Line Futures to give our traders that are listening in a better idea.
Well, we're an independent introducing commodity brokerage located at the Chicago Board of Trade. So we work very heavily in the futures and options space, from retail traders who've never really traded before to private offices and floor traders who've been trading for the last 30 plus years. We've got great platforms. We send out a lot of great commentary each and every day, covers a wide variety of markets. I focus on the agricultural side. Bill, as you know, focuses on the energies and metals and kind of those more macro markets. So a lot of good content to kind of give our clients a roadmap for each trading day.
Well, I love what you guys do over there. And remember, guys and gals, if you're watching Oliver on YouTube, make sure you give him a thumbs up, subscribe to the channel down below so you don't miss any of their great content. Bill and Oliver both contribute to the Traders Summit community almost daily. We have columns that come up from them. And so make sure you're following us there. Oliver, I want to say thanks for joining us today. Have a great weekend. And I can't wait till the next time you and I get to sit down and meet.
Thank you. I'm looking forward to it as well.
Have a great day.
You too.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.